Southeast Radio's Business Matters with Karl Fitzpatrick.
Southeast Radio.
Welcome back to Southeast Radio's Business Matters with me, Karl Fitzpatrick. Well, one of the many areas which has been dramatically affected by Covid-19 is the international stock markets. Here to tell us more is Aidan Donnelly from the Davy Group. Aidan, you're the head of equities with the Davy Group, but I'd like to start the interview by gaining an overview of the stock market. We have heard lots about the New York Stock Exchange, the FTSE, the Nasdaq, the Dow, etc. But how do these markets differentiate themselves from each other?
Well, for the most part, what you're looking at there is basically different stock markets in different countries. So the people will have heard of the Dow and the New York Stock Exchange or the S&P 500, and they're the main benchmarks within the US market. The FTSE is obviously London, and then within Europe, you've got things like the DAX in Germany or the CAC in France, but also then you've got a kind of a pan-European index called the Euro Stocks, and that's really basically an index or a list of all of the largest publicly quoted companies in Europe. So really the indices just are kind of give people an idea where the companies are what's called listed.
And if we look at the stock markets throughout 2019, generally, how were they performing?
They had a very, very strong 2019. You know, across the board, you were probably looking at anywhere between kind of up 25% up to up 30%. Now, had it followed on from a very weak fourth quarter in 2018, but still in all, you know, they were very, very strong, and they had a particularly strong finish to the year because the central banks around the world were pumping liquidity or cash into the financial system to make sure everything was kept going. And really that cash had only one place to go because interest rates were so low, and you know, for investors, they had really only one alternative, and that was to go into the stock market. So that drove share prices quite a bit higher. And you also had a reasonably good economic backdrop, which meant that company profitability was going up over the last year, and that also helped.
And of course, in late December then, China announced a Covid-19 outbreak. Did this have much of an initial impact on the stock markets?
It actually had very, very little. If you think back to January, there was two major events happened in January, and really the stock market took, you know, a one-day shock and then moved on very, very quickly. The first one would have been the increase in geopolitical tensions when the U.S. Killed the Iranian general in Iraq. And, you know, that was on January the 2nd. And then we had, you know, probably one day of a bit of a sell-off in the market, and then it was back together. And then a couple of weeks later, really news started to come out from China about the COVID-19. And initially, there was a little bit of a worry for about a day or two, and then the market just continued on. And really, it was being fed by this continuous diet of cash coming in from the central banks, particularly the U.S. Federal Reserve. So, you know, initially people just kind of brushed it off and said, it'll be fine. But ultimately, we now know that that everything catches up.
Of course it does, and since then the world has been gripped by a coronavirus pandemic. We are all only too aware of the devastation which has been caused by the outbreak, but perhaps you might be able to reveal the extent of the impact which COVID-19 has had on stock markets to date.
Well, you would have seen probably since the start of the year, markets are probably down well in excess of 20%, and having had a decent start of the year. So when from the very peak of markets, we're down in some cases well into 30% from the recent high. So that has been a substantial amount of damage in terms of share prices done right across the board. And really, there's been no region or no index that has managed to escape. Very few companies even have managed to escape. Nearly every share has probably seen, of the major companies anyway, have seen substantial pullbacks in their share prices.
And Aidan, in your opinion, other than COVID-19, were there any other contributory factors to this crash?
I think the other main one was the substantial fall in the oil price we had, and the spat that is developing between Russia and Saudi Arabia about oil supply globally. I think that the two parties are really trying to stamp what little authority they have left on the oil price, and as a result, they're kind of willing to see it fall and try to shake out some of the other producers globally in order to try to increase their own market share. But that obviously had an impact too in terms of a knock-on to global economic growth.
And at this stage, do you think that the markets have reached their lowest point?
It's very hard to say because nobody can really give you a guide as to where the COVID-19 situation is going to develop. I think, if you want to be optimistic, you could say that an awful lot of bad news is already priced into the markets. Like we've done some work to look at what sort of an earnings decline or profit decline has been priced into markets, and you could be looking at something like 15 to 20% of an earnings decline or profit decline pitched priced into the US at this level, and in Europe maybe something up to 30%. So it's that pretty much ties in with what a normal recession would be. So people are saying, "Oh, I'm very worried about a recession." Well, good news is that that's already priced into markets at this stage. The problem that you've got is the market can react much more on sentiment than naturally rational thought sometimes. So, if you were to get another spike or a substantial spike in COVID cases in the US, which chances are we probably will see at some point over the next few weeks, that might well dent our investor sentiment again, and we could see another move down. But there has been a lot of damage done so far. So to a certain extent, people who are thinking about investing, it's a damn sight better place to be thinking about it now than it may be 3 or 4 weeks ago when markets were double-digit percentages higher.
Now, some business owners listening to this morning's show may be looking at share prices now, and if they have sufficient capital to spare, as a way to mitigate their business losses, may be considering investing in shares with a view to making a return over the next 2 years. What are your thoughts on this particular strategy?
I think the most important thing is to make sure that they have enough cash reserves for their business and for themselves. So to the extent that they have truly free cash at the end of that, well then by all means they can think about investing. But it's not without risks, and markets can be very, very volatile. So it's about, I think, taking the idea that looking on a 2, 3 or 4 year basis. I'm willing to be able to lock the money away and not be kind of panicked out of further kind of volatility in the market. That's important. Now, stocks and shares aren't for everybody. It might sound strange, a stockbroker saying that to somebody, but they're not for everybody. And people have to be very, very comfortable. And certainly, I wouldn't recommend anybody going with their last €100 to be heading to the stock market. So I think, to the extent that there is true free cash flow available and people can afford to leave it in place for 3+ years, well then by all means, there are opportunities in the market. But I think two things that are really, really important to think about is, one, when it comes to investing, you should really only be investing in good quality companies that are going to be around for the long term, number one. And then number two, you must ensure that you've got diversification within your portfolio in terms of by region. So make sure that you've got companies that are listed in Europe, the US, the UK, and Ireland, and also then by investing in lots of different industries. So not just maybe a couple of names that you've heard of, but make sure you've got things like some tech names in there, some industrial names, some financial names, some consumer names. Get a good broad spread across as many different industries as you can. And as a general rule, it's much better off to have, up to a certain point, more names or more companies invested in rather than less. So it's about getting that diversification by the number of stocks, by the region you're investing in, and by the sectors that you're investing in.
Now, two particular sectors that have been very hard hit by COVID-19, of course, are the cruise line sector and the airline sector. Is there value in those sectors at this stage?
For the very brave-hearted individuals, I think there will be. The problem that you've got is, until we kind of have a better handle on what the duration of this COVID infection is going to be. It's very hard to say with any great certainty, that the low has maybe been reached in some of these sectors. I think the other thing that's really important is there are in both those sectors companies with very, very substantial debt. So, if people are thinking about looking at those sectors, I think they need to make sure that the companies that they're looking at have very strong balance sheets. Debt is not too bad. They have good business models, good management, and again that they have a breadth of operations globally that mean that as different regions get back up to speed before other regions, that they're benefiting from that and not just kind of focus maybe in one small region of the world.
And is there any particular companies that come to mind that tick all of those boxes for you?
There's lots of I think you just think about on the airline side of the very, very big players globally. So whether it's the likes of a Ryanair or an IAG, which owns Aer Lingus and British Airways, or a Delta in Delta Airlines in the US, they're all big companies that ultimately will stand the test of time. They've been through many, many cycles. They've got strong balance sheets and they've got good management there. On the cruise side of it, you've got the likes of Royal Caribbean and Carnival. Again, probably and even closer to home, something like Irish Continental Group that have strong managements in place. But again, these tend to be very, very volatile. And I would certainly, while people might look at them as part of, and maybe a small part of their overall investment portfolio, I certainly wouldn't be taking big positions in them. And again, I reiterate that idea of having diversification across many, many sectors.
And of course, one of the things that investors need to be very conscious of when they're looking at these companies is, although they may be a market leader in their sector, have they got enough of cash to bring them through this particular period?
Well, that's it. There's an old saying in this game that a company never goes bust because of its profit. It goes bust because it runs out of cash, and that is very, very important. And I think, from that perspective, it's a key metric to be looking at to make sure that there is strong cash flow being generated. There's not too much debt that soaks up a lot of cash flow, and that the business model that they've got is one that is going to grow over the long term, because you want to see the cash flows growing as well as being safe.
Well, if you've just tuned in, that was Aidan Donnelly from the Davy Group, and he has certainly provided us with food for thought regarding investment opportunities on the international stock markets.
Southeast Radio's Business Matters with Karl Fitzpatrick.
Southeast Radio.